All right, for today's highlight, you're always reading and you have to read the real time. We break. We know that much. After this particular session's open, we open up weak. There was fundamentals that drove us down, and some of those fundamentals kind of unwound here at the bottom. What do I mean by fundamentals? It was in this case geopolitical. The first story that sent us lower in this case was that the Strait of Hormuz is going to remain closed. And it was tough talk coming from Iran, and that was kind of walked back. But that walk back didn't make us go straight up, but it did kind of alleviate the weakness, kind of a relief rally. But here's what's most important. We get a few things that when you read the lows here, you're never going to pick the bottom. Don't try. Don't try to be perfect. Sometimes you will get the bottom, but don't try to be perfect and get the bottom. Let others get stuck trying to pick the bottom. A couple things happen. You get a red laser, that's these red lines in here, and there are many, which means you're accumulating a lot of shorts. What I wouldn't like is a double pink triangle. That means that there is a sell imbalance up here. Fine. All right. That means you don't want to qualify along. That's all. If you're bullish, then you get a breach of a barely blue triangle, 254. It's a small, so it's 250 and up. So it's one of the smallest ones we would get. And it breaches, meaning it goes below a blue triangle. That's fine. That's a little bearish. And then something important happened that you have to at least make sure you're aware of. You not only get a blue triangle, but you get a big blue triangle. 708. Some of the bigger ones we will see are north of 400, 500, and this one is 700. If you're bullish, you could take a shot that on that alone. If you're short, you get out. But if you're bullish, you could take a shot on that. But you at least have to take this, the fact that you get a bunch of buyers coming in. And remember, a blue triangle is more people who want to buy it versus people who want to sell it. Future buyers, future sellers. You have to compare them to each other. All right. Future buyers versus future sellers. And you draw that in like that. All right. If you compare, now you're able to kind of pull value like we do when we try to find the value of anything. You generally are comparing it to something else, but there's an overlap with being bullish. And it's not just that 708 blue triangle. The other overlap was the walk back of the comments that sent us down. If you know the comments that sent us down and then they walk those back, it's not necessarily going to send us all the way back up and get strong and stay strong, but it's a probability that the reason why we're down has gone away. So you got to be aware of that. So that combination is where you get your overlap, and maybe that's your trigger. Maybe it's a trigger not to get short, which would have been excellent because you wouldn't have had any fun being short this market over the next 60 minutes. If you were bullish, maybe it was a trigger to get you long. Either way, you have to read the reaction of new information. Number one is to be in front of new information, put yourself in a position to get new information before most of the rest of the market. But most importantly, you have to be able to read new information. New information is just what it means. It's new. The market didn't know in here that Channel 12 out of Israel was going to report that Iran's going to keep the strait closed, and they were kind of talking tough. Market didn't know that inside this circle, so it prices that in. The market didn't know in here that those comments were kind of walked back. It's new information. How are you going to read it? The market didn't know that all of a sudden there was this really big buy imbalance that we see by filtering out real buyers and real sellers. We filter down to find what we feel are real buyers and real sellers that are in the book. It's not just the numbers of bids and the numbers of sellers or number of offers. We are filtering through that to qualify that they're real, that they're not just algos playing games with spreads and everything else. So there's a way to kind of know that this number is our bids that are going to be there and want to get filled, offers that are going to be there and want to get filled. Then you compare them to each other and you come up with the delta. In this case is 312. In this case is what? 338. And all that means is within a tight range from last traded price, because that's where the ball is. If you think about football, where's the ball? That's last traded price in trading. So plus or minus 3 ticks from last traded price. That's the area that we're watching, because generally people putting in orders there are more serious than someone who's going to put it in 3, 4, 5, 10 points away. But even those guys that put it in plus or minus 3 ticks are not really there to get filled. So that's what I mean about filtering these out. So once we get to our core number of future buyers and future sellers around the last traded price, plus or minus 3 ticks, then we just use simple math. And if there's 600, what we identify as buyers within 3 ticks of the last traded price, and 300 offers, contracts that is, plus 3 ticks above last traded price of the filtered contracts, well, we would have a blue triangle set in there because it's above 250. In this case, it would be what? 300. And that number would be right there. That one's 312. So there's a lot going on in the background to come up with a triangle. But when you get down to it, it's the simplicity of future buyers versus what? Future sellers. And something changed, new information to give you a read. Did price react? What's the difference between this blue triangle and this blue triangle? And you could tell pretty quickly in how quickly they react versus this one and this one. What does price do to new information? If you're supposed to read new information, watch price. How does it react? Because that's what we're predicting is where price is going to be. Well, how does it react to new information? That's what reading the market is all about.